Hey guys, Steve here from theturtlefollower.com with the stock market outlook for the week of October 13th. So a lot's changed since last week. We talked about last week the potential to bounce off the trend line and eventually revert back to higher prices, which has been the pattern over the last year and a half or so. What happened this week instead was we did get the initial bounce off of the trend line that we were looking for, but on Thursday, Friday, we really put in some heavy selling pressure, and the bears really took control of the market. So we had talked about the idea of this triangle filling in and then trying to figure out which direction we were going to be heading. Obviously we thought eventually that it would be a bullish situation, but it turned out that the bears took control. Now we're breaking down below 1900 on the S&P futures. So next level that I would see for a potential bounce would be this 1868. You can see that is the resistance of the consolidation that formed between March and April of this year. So as far as the S&P goes, and as far as actually all the indices go, we're in a downtrend. The fact is the markets are moving down, and at this point, we're really looking for either to start trading to the short side or to just really make sure we're managing our positions well enough that we are taking our exits, raising cash where needed, and entering the long positions in the strongest stocks. If you follow the strategy sessions from this week, you'll see that we did make 3 entries this week, which is kind of unusual if you think about it. When the markets are trending down, we're making 3 long entries, but if you go back and watch those videos, you'll see the reasoning behind it and why we actually were going ahead and doing that. Now, if we look at let's close these up so I can get the. If we look at the NASDAQ, now NASDAQ on Friday was the worst performer. It was down almost 3% compared to 1.06, 1.6, and 1.91 from the Dow, the S&P, and the Russell, respectively. So you can see here that the NASDAQ has reached what we talked about last week being the next support level of 3850. All right, we hit that yesterday or Friday. At the close, and you can see that goes back to the consolidation we had from July to the middle of August, and you can see that there were some tails that pushed through it, but ultimately we did close higher than that level. So for the NASDAQ at this point, I would definitely look for a bounce. Whether that comes back to the trend line or not, that obviously depends on how strong the bounce is. But what we could possibly see here in the NASDAQ is a bounce and then maybe a consolidation between 3850 and 3975. Now, if we do get that consolidation and then break down again, then ultimately we have a head and shoulders pattern, with this being the left shoulder, the head, and then the right shoulder would be here if we had another breakdown. So that ultimately is a reversal signal, so that could lead us to some lower prices, but let's see what happens if we can form that right shoulder and then break out higher. Then that negates the head and shoulders pattern. But for right now, you could see the trend line was broken. Now we're trading below the 50-day moving average, and the fact that we traded down almost 200 points from high to low on Thursday, Friday, I would expect to see at least some kind of bounce off of this 3850 level early in the week, and then see how we progress from there. Now the Dow was down 1.06, 176 points, and this one is the strongest of the 3 per se. You could see here the trend line that was in place using the February lows and the August lows. We just broke that level on Friday, and again, Friday's selling action in the afternoon to me felt more of a panic selling than we've had. It just seemed like there was no disregard for what stocks. It was just sell everything and get into the weekend type of thing. So a lot of times what they call that being short in the hole, where future sellers continue to sell and there's really no price structure to support it. So you could very well see a bounce on Monday, to cover those shorts. But essentially what happens is I'm looking at this 16,230 area on the Dow as being in the next support area. Give or take 100 points, I would say, depending on where we end up going to. But again, downtrend line still intact. Uptrend has been broken. So next support area that we're looking at is probably around that 16,230, 16,200 area, and that would go back to the consolidation that we had again from the end of March to the beginning of May. And the last one, the Russell, down 1.91% on Friday, and this one was one that we had been discussing using this symmetrical triangle where there was some lower highs and higher lows. Okay, higher lows, lower highs. It looked like we were eventually going to bounce, test the upside of this triangle, and then sure enough we broke down and have continued to break down since. Now I really thought that we were going to see some kind of bounce, which it looked like we had on Wednesday off this 1065 area. Sure enough, Thursday, Friday took that right back and then some. So really the only other spot that I see being support now is down here. Let's get the right tool. Now we have to go back to the weekly chart just to get back. So my next obvious support area would be 1,000, and that would be the highs and the lows from, let's see, the highs were from May of 2013 and the lows from August 2013. So that would be the next area that I would look at as support. You could see that 1,083 area was some significant support, and that has been broken. And now this almost looks to be more of a rounding over where we had some higher lows. We had a double top, came in, put in a lower high, and now we have a lower low. So again, looking for probably some kind of bounce in the near term, but I would look for us to probably trade somewhere down towards 1,000 on the Russell. Now with all of these stocks, you can see we've started using the linear regression channel, and we are pretty much pinned at the second standard deviation for almost every indice. Okay, the Russell is there, the Dow pinned right at the second standard deviation, the NASDAQ is the same, all right, almost to the second standard deviation, and the S&P right there. So basically what that tells me is I have to believe there's some kind of bounce coming. I'm sure it's going to be a sell the rips type of bounce. I'm sure people are going to use it to lighten up positions, so I wouldn't see them to be much buying pressure behind it. It's more covering a position, getting out of a position at a better price. So for this week, if we can go sideways, I think that's a great sign that maybe we can put in some higher prices. If we bounce too significantly, I would see that as more of an opportunity to sell positions. If that's how your trading style is, that you want to sell into those rips, I would think you want to take some risk off. For us, we're going to continue to follow our plan. We are actually entering a position for Monday morning in Pepsi, so if you haven't watched the video from the weekend, definitely do that, and you could see our rationale behind our entry in Pepsi. And we'll see how the week progresses, but like I said, I would see it as a success for the bulls if we could at least just go sideways to higher and just stop going down at this point. So that's it for now. We'll see you tonight for the strategy session. Thanks for watching, and please be sure to follow me on all the social media channels. Have a great rest of the day, guys.